In the realm of money matters, Robert Kiyosaki stands out for his daring investment moves, but his whopping $1.2 billion debt raises eyebrows. Yet, amidst this financial puzzle, one question looms large. How does he keep going despite owing so much? Delve into Kiyosaki's unique approach to money, unraveling the secrets that defy traditional wisdom and inspire us to rethink our financial strategies. Elevate your finances with WealthWise Insider, wisdom for wealth builders. Robert Kiyosaki is famous for his book Rich Dad, Poor Dad. It's all about how to invest wisely and make money. He's the guy who told everyone it's better to own more things that make money than things that cost you money. Once he was asked in an interview if he owed about $600 million. He confidently said, "Nope, it's actually $1.2 billion. Some people got worried when they heard this, especially after seeing conflicting reports. They thought maybe he wasn't following his own advice. But it's important to look at things from different angles before deciding. So why does Robert Kiyosaki, a smart investor, have such a big debt? Let's check out his way of investing. He's pretty clever and doesn't think like most people do. Usually, folks are afraid of debt and try to avoid it. But when Kiyosaki talks about being in debt, he's doing it on purpose to benefit himself. Before we get into the details, there are two main types of loans: recourse and non-recourse. A recourse loan is when if you can't pay back the loan, the lender can take your stuff, like your house, to get their money back. On the other hand, a non-recourse loan is mostly for businesses. With this type, if you can't pay, the bank can sell the business property to cover what you owe. Now let's see how Robert Kiyosaki uses debt to his advantage, which is really the heart of the matter and why he's not stressed about having $1.2 billion in debt. The banks that lent him money might be the ones feeling uneasy about it. If you watch any of Kiyosaki's interviews, you'll notice he's not too trusting of the government or the tax system. He's always saying that things like stocks, bonds, and such are on shaky ground. So if he's not putting his money there, where is he investing? Well, he's into real estate, gold, silver, and oil. Kiyosaki has loads of these assets, and he doesn't just keep cash lying around. He's also keen on cryptocurrencies. Real estate is a big one for him, owning a whopping 15,000 properties, all bought with borrowed money. He's got gold and silver mines and oil wells too. You see, while most folks might buy gold or invest in gold stocks or funds, Kiyosaki goes right to the source, the mines themselves. Same goes for oil. Instead of owning oil company shares, he owns the actual wells. His focus is on what's really valuable, the stuff everyone needs. He keeps saying you should put your money in silver. Why? Well, back before 1971, the dollar was backed by gold. But after that, the government could print as much money as they wanted, which messed with the value of it. So Kiyosaki figures that since money can be made anytime, its value isn't up to the market anymore. It's controlled by some authority, which can change supply and demand at will. That's why he says owning real stuff like gold, silver, and land is always a good idea. In his book, he talks about good debt and bad debt. Good debt is when you borrow money to buy something that'll make your money back, like getting a loan for a business property that you can rent out and earn from. Bad debt is when you borrow for something that loses value over time, like buying a car that's worth less the longer you have it. How do you explain Robert Kiyosaki having $1.2 billion in debt? Well, when Kiyosaki wants to buy a property, he borrows the maximum amount the bank will give him. Let's break it down with a simple example. Say he wants to buy a commercial property worth $100,000. He puts in $20,000 of his own money and borrows $80,000 from the bank at 7.5% interest. Let's say the property earns him $10,000 a year in rent, which is 10% of its cost. Now the interest he owes on the loan is about $6,000. So overall, he's made a profit of $4,000. He takes this profit and uses it to buy another property, and the cycle continues. This way, all his properties make money and cover their own costs. The bank is happy to lend to him because they see his track record and the value of his properties. Plus, the loans are non-recourse, meaning if Kiyosaki can't pay back, the bank can sell the property to get their money back. That's how Kiyosaki owns 15,000 properties and has $1.2 billion in debt. To him, this debt is good because it brings in money and keeps things flowing smoothly. During the 2008 financial crisis, Kiyosaki seized an opportunity and bought $300 million worth of real estate when prices were low due to the market collapse. Now, why does he seem unconcerned about this large investment? It's because the banks had given him hefty loans, and if he couldn't pay them back, it would be a major problem for the banks. They'd have to explain to their stakeholders and managers why they had such big losses on their books. Let's say Kiyosaki got a $50 million loan to buy a commercial property. The bank could carefully assess the property's potential, estimating that it could be worth $200 million or even $500 million in the future. So they'd feel confident lending him $50 million. If one of Kiyosaki's properties isn't doing well financially, the bank would worry more than he would. They'd put their top experts, maybe even graduates from prestigious universities like Oxford or Stanford, on the case to try and turn things around. Kiyosaki understands this dynamic. He knows that if he fails, it's not just his problem. The banks have a lot at stake too. That's why he's careful to invest in assets that will appreciate in value and generate steady income. And if things do go south, he trusts that the banks will bring in their best minds to find a solution and protect their interests. It can be observed that Robert Kiyosaki has accrued a significant debt totaling $1.2 billion. It's a common practice among wealthy individuals to utilize debt to generate income, which often results in substantial tax deductions. Kiyosaki himself has expressed his preference for holding considerable debt, citing his hamburger business as a primary source for repaying it. For instance, if he were to have $20 million in debt, he highlights that each sale of a hamburger contributes to reducing this debt burden. This strategy allows for a reduction or elimination of tax liabilities, ultimately resulting in minimal tax payments. As we conclude, let's ponder. How might Kiyosaki's bold approach to debt challenge our own views on financial management? What lessons can we take away from his unconventional strategies to shape our own path to prosperity? Share your thoughts in the comments below. And don't forget to subscribe to WealthWise Insider for more insights on achieving financial prosperity. Until next time, remember, smart wealth, wise future.